Hello everyone, good morning. Today I wanted to make a video to share with you my insights on investing in the stock market versus investing in real estate. I wanted to share with you my takeaway on the differences, specifically on the benefits for investing in the stock market, what are the risk implications, as well as looking at the benefits and risk for real estate investment. Okay, let's get started. Now, with real estate, I wanted to emphasize that with real estate, it takes a lot of effort and not so much of thinking. Let's say if you and your spouse have agreed upon taking the real estate investment, the most important things to look at when purchasing a home would be things like looking for a house in a very good education system. For example, meaning you look for a school district that has a high test score rating where you would want to get your house nearby. So that would definitely reduce the risk in the long term because when you purchase a house in a good education system, the house pricing will likely go up and you won't have to worry about the house price depreciating compared to other cities. So that's why I feel like, let's say, if you want to go the real estate investment route, the number one criteria is looking for a solid school around that housing area. And I think if you keep it simple in that regard, then that means you'll be all right. But let's say if you were to invest in houses where the school rating is like 5 out of 10 or 4 out of 10, then let's say when there are some external threats, meaning like the economy starts correcting itself or going into a bear market where we have a correction or a recession, then that means there will be lots of defaults happening with mortgage payments. And that's when a lot of families will start being worried to be able to make ends meet to pay for monthly bills for their mortgages, because renters who actually are living to support the payments of the owners who have the contracts, then that means there has to be some emergency fund to cover those funds, and that's ultimately up to the house owner. But in this current state right now, with the stock market correction and so forth, we know that the return on investments for real estate will continue to go up, right? I mean, risk will be reduced when you're invested in the real estate market. If you think about it, I mean, look at the population size in the United States. That will continue to grow, although land will continue to be scarce. So if you keep it simple, real estate investment is a great strategy opportunity. My own thinking is I want to stay in the stock market realm so that I can capitalize on positive proceeds. I personally feel like my investment strategy with the tickers that I have in place can go beyond the current return on investment on real estate, which is why I'm holding off on real estate at this time, and I'm hoping to capitalize on the stock market because I feel like with my strategy, the return on investment can go beyond the double digit range, which is why I'm seated in the stock market currently to gain on the momentum there. And my goal is, I'm not excluding the real estate. My goal is to gain on the stock market and potentially use the liquidity, the assets from my cash fund, and make a purchase on real estate, and not so much of relying on a mortgage payment, because I personally feel like if you want to pursue the independence living, then it's important to just pay off that big purchase that you want, because with interest rates creeping up from year by year, that right there can just be expenses right there. And I want to minimize the expense you have to pay throughout the year, because that will likely offset your return on investments, whether you're in the real estate market or in the stock market. But with real estate, let's say if you're thinking about just living in a small room where you want to get into real estate and you want to rent out that full house or condo or who knows what, then that means you can gain on that and use the funds from rent and pay off the mortgage. That would work too if you want to live a more frugal life. That's a great strategy. But for me, let's say if you can capitalize more than 7% in the stock market consistently where you don't take downfalls, then that means you can gain potentially more in the stock market. For example, let's say if you set a target of wanting to be in the stock market for 5 years before you purchase a home, then what's going to be your return on investment? Is it above the current average return on investments with real estate? If it's above, then you may want to consider not going this route. So thank you so much for watching another episode at Investing with All I See Is W, and I hope that this video gives you insight on the sort of the differences on which route to take based on your investment strategy. Okay, so you've heard from me on my takeaway, and I hope that you can apply it to your investment strategy. Thank you so much for watching another episode at Investing with All I See Is W. Thank you.